Okay, so we are live. Alan, how are you today?
Great, man. How about you?
Awesome. Not bad at all. It's good speaking with you. Thank you for taking the time out
Yep.
to chat with us today on our live. Give me 1 second. I'm going to go check the social media channel so that if anyone has any questions, we can answer any of their questions. So
Right.
just give me 1 second with that.
Not a problem.
Uh, uh, what have you been up to today?
Oh man, daddy first, husband, real estate agent, property manager, a little bit of everything today. Um, yeah, it's been uh, man. I've been telling people like our business hasn't slowed down, but it's certainly changed. So a lot of the things that we're used to doing have changed. So just every day is something. In your business, every day is something new now. Like literally, like every day is something new.
Yeah, I had a flashback yesterday. We had a client yesterday where we had it's an alternative type of loan. It's a line of credit that we've been using and working with investors on as an alternative to hard money lending to do fix and flip products. And in the morning, they mentioned that they were going to suspend operations on that particular loan. But however, everyone that was in process was protected, so we could continue to move forward with this particular loan. Uh, no less than an hour later, I get an email basically stating that no one can actually close. So I had a client that was in process. They had a couple, like maybe one document to provide, a legal document to get their loan cleared so that they could close and purchase on their fix and flip property. And now they have to wait, number one, until this particular lender gets back into the market to do the loan or not. And then so, yeah, it's ever changing. I'm seeing some in regards to credit scores, like FICO changes, like where we could do maybe an FHA loan at a 580 credit score for homeowners or potential homeowners, and now we're looking at they're being bumped up in certain places.
Right.
Just yeah, it's definitely a change. So I'm today. Thank you for your time. We won't take too much time, maybe a half hour or so, Alan. And I
Okay.
really appreciate you coming on to help us out. I've been knowing you forever, and we've been doing business for a great deal of time. Actually, not as long as you've actually been in the business. And I look at you as an expert, as do many people in my network, as well as obviously your network. We both attended George Mason University together and such.
Yep.
So we know a lot of the same people. And so a few Saturdays ago, I don't know if it was 2 Saturdays now or three, you did a Facebook Live, and
Mhm.
I mean, I know you and I talk to you all the time, and so uh, I apologize, sir, but I don't look at them all. But that particular one, I locked in on it and I listened to it the entire time, right?
Right.
And there was a few things in there that you talked about that I kind of wanted to discuss. So today we're going to go through what we call the 5 considerations for buying and selling real estate, and we may not go and touch on them all in great detail. But one of the things, Alan, that you talked about was number one, you mentioned rates, right? And so, but you said this cycle is all about the cost of money and inventory. What
Right.
were you thinking when you said that?
Right. So a lot of people, we've been getting a bunch of questions from people about whether we think the prices are going to pull back. Right? Is the market going to pull back? And I think that's a legitimate question. But I look at real estate in a holistic sense, right? So not only am I concerned about what the price of the property or the piece of property I'm purchasing, I'm really more focused on the cost overall of the asset. And the one thing that people just don't really get a firm grip on, Shawn, is the cost of your money, right? The cost of your money has a much bigger effect on your total real estate investment than if you get a home for 5, 6, 7, 8, 9, 10 grand less, right? If you can end up sinking into an interest rate that maybe is, a 0.5% less, and you plan on keeping the property for 10, 15 years, which that's what most people are doing right now. No one's buying anything short term in this market. And if you are, then I don't recommend that you buy, short term in this market, unless you're a flat out investor and you're flat out, all cash, right? And you're trolling for property. But for the vast majority of buyers, I would say like 40% of you looking at real estate when it comes to is this a good financial move, is the pricing, and 60% is what's the cost of your money over 10 years, over 15 years, and over 20 years. And if you really start to dissect it, I mean, you can tell me like a 1% interest rate, difference on a $400,000 house over the cost of, over 30 years is what, like 80 grand?
Yeah, about $80,000 over that period of time.
Right.
And
if
then
you're on 700,000, it's
hundreds. It's like almost $150,000, about a little over 140K.
correct.
In that long period of time. And then most people, they keep their homes 7 years or so. And there's like in regards to a real estate transactions don't happen, but what, every 6 to 7 years or so.
Right.
Yeah.
I think the average person is. I mean, I think if someone's moving in this type of client, this is in this type of climate, this is a 10-year house, right? This is a minimum a 10-year house. This is someone that's going to hunker down. They're going to stay there for a while. So, when we're sitting down with our clients, we're really writing it out. We're saying, okay, you're thinking about buying a $500,000 house and you can get it at this interest rate. A year ago or 2 years ago, your rate would have been here, right? Let's say hypothetically prices did come down 3%, right? You're talking about $15,000 versus $80,000. When you start breaking it down on paper, it just makes sense for the right person to get into this market, right? This market is not for everyone, but this market is certainly for someone. And you've got to sit down and start to dissect more than just looking at things in a vacuum to figure out if you're that someone.
Right. And where are you guys largely located? I know your office is in Prince William County, but you cover the entire, greater Washington, like metro area?
Yeah, so we cover DC, Maryland, and Virginia.
Okay, so like I did a little bit of research. I was looking based on some February numbers. Redfin was a source for this. In Prince William County, where you guys are, like Woodbridge, Manassas, Haymarket, in those areas, right? Haymarket's in Prince William. Yeah. Last month, 379. Does that sound about right? Is the average sales price? Mm-hmm. Right, and it's about 4% up from last year. Yeah. This time. So if you look at a 380 sales price, for instance, at a 3.25% interest rate, if you wait, like when the rate changes, then next year, if the rate goes up a quarter or next month or whatever it might be, now your buying power goes down by about $10,000, $10,000 to $15,000.
Right.
That's a big deal in many markets. I looked also, like for instance, Fairfax County, Alan. Let me see, 555,000.
That's right.
Which is a lot more, and that's significant. Like now we're looking at about a $20,000 swing, based on a 0.25% interest rate change. Wow. All right. So cost of money, right, is important.
Right.
Cost of money.
The other thing was that we talked about was inventory, right?
Right.
The real estate market for the past 4 years in the DMV, the greater DMV, has been a hyper seller's market, right? The reason why it's been a hyper seller's market is simply because of lack of inventory, right? Okay. If you really look at how long market cycles last historically, they generally last between 7 and 10 years. Well, we all know that the real estate market was at its bottom in 2008, 2009, tack on 7 to 10 years onto that. Like we were supposed to start to pull back or flatline anyway. So the first thing I'm explaining to my clients is that what you see on the greater national scale is not what happens in the DMV. Like we live in a very different market, and real estate is very local, right? So when other people were pulling back, we just may not go up, right? So instead of someone in Omaha, Nebraska, or someone out in some greater Texas, their real estate market pulling back by 5, 6, 7 whatever percent, our real estate market pulling back may be down 1%, maybe down 2%. It may just be not appreciating at the same level that it was. So you got to understand that our market is a lot different, and it's a dynamic market. So since we haven't had inventory, what happens is when you don't have a whole lot of supply, right, demand goes up. Yeah. So that's been pushing our market. What actually happened with the virus is that it paused a lot of people. So it paused people who were out there actively trying to buy properties. A lot of people like, you know what? I just don't want to go out amongst people, or this purchase just wasn't that important to me, or this made me kind of recalibrate, my finances, or I may have lost it. Something happened in their life where they paused. But what we found is that there's still people putting their home on the market, right?
Right.
And the inventory now is being given an opportunity to catch up to a more normal, just a more normal level. So, for those buyers that are out there anywhere, around average sales price, who've been writing five or six offers. I mean, you've had clients written 5 or 6 offers, couldn't get them.
Yeah.
This is a good moment for you. Number one, you know what a good deal is, right?
Yeah.
Because you've been shopping. Number two, you're fully prepared. You know where the numbers are. Number three, if you've been shopping over the past year, your rate's probably maybe the same or maybe a little bit less than what it was a year ago or wherever you were.
Yeah, they're definitely a little bit less than what they were a year ago. Yeah, definitely.
And you've got more inventory to look at. And you've got a more serious seller, right? So we were in a market where sellers would wait until Monday. They would put their home on the market on Thursday. They would hold an open house. The agent would collect all these offers. And then, it was bumping the price up. Well, guess what? Sellers, number one, aren't doing open houses. Number two, if a seller puts their home on the market now, they are dead serious.
Got it.
They are not.
Oh, I apologize. Keep going. I have a question for you. Go ahead.
Yeah, they are dead serious. They're not putting their home on the market for just to see what they can get, right? And if they get a legitimate offer from someone who's solid, they're going to accept it, right? So we're in a market now where we got a really serious buyer and we got a really serious seller, and we got the cost of our money is a lot lower than what it used to be, and it's really a recipe for a more balanced market.
Understood. And what are you all seeing like right now? With the scare on the coronavirus, people are doing the social distancing and such. I'm still doing a good bit of pre-approval letters. There's still a ton of activity with people looking to purchase. How are you all overcoming this? Number one, on the listing side, when you're selling someone's house, and then number two, on the buyer side, how are you overcoming this situation we're in right now?
Yeah, we're doing a lot of the things that we did normally. So we were always doing, so in DC, we've always had people, and you've dealt with some of our clients that have been overseas, coming back. We got civil servants, we got State Department, we got military, we got high-level business people that are always on travel. And when they come back, they oftentimes have to make those buying and selling decisions when they're far away. So we've always been doing virtual. Like, we've always done virtual buyer consultations. We've always done listing consults that are virtual. A lot of our clients kind of allow us to handle it from the beginning to the end.
Yeah. So
we've always been used to handling, getting contractors into their homes and, making sure that a lot of those, loose ends are tied up for them. Virtual showings. So a lot of our clients are used to us going and filming homes, and, the first time they're seeing their home, maybe home inspection, right?
Wow.
So, some people are cool with that. And some people are just adjusting. They're putting on gloves, they're putting on their masks. The sellers are vacating 15 minutes, 20 minutes, an hour, 3 hours ahead of time. They're going to stay in a hotel for a weekend. I just think you got to be smart about the way you do business. But, if you got to move, you got to move, right?
Understood. And what I would assume that's a selling strategy for your buyers and your sellers. What are some other tips on selling your home? Like, if I'm coming to you, Alan, I want to put my house on the market,
right.
Get it sold, within the next 90 days or so. Like, what should my expectation be? Number one, the length of time to sell it. Number two, like, your strategy to help me sell my house.
Right. Number one, don't play. Right. If you're going to do it, do it. Right. And I would say, if you're planning on selling your home in the next 90 days, you need to push that timeline up. You literally need to be thinking about doing it right now.
Why?
Just because you think about New York. New York's already shut down real estate activities. California's already shut down New York real estate activities, meaning they can't do anything, right? And they very well may be in that bubble for the next, 3 months, 4 months, where they can't do anything. So we still have the ability to be able to move around just being careful and making sure we're socially distant and making sure that we're adhering to things that are safe for everyone, including ourselves and the entire general buying public. If I'm looking to sell my home within the next 90 days, I'm putting it on. I'm putting it on the market next week.
Wow.
Right. Number two, I think you got to price right from the beginning, and we've already started to see prices pull back a little bit, maybe 1 to 2 to 3% in some locations. So instead of you just looking at homes that sold over the past 6 months, you need to look at homes that are under contract, and you need to make a small adjustment in your list price based off of the current market that we're in right now. It's only going to be if you underprice it, you're going to get multiple contracts, and it's going to bump your price up anyway, right? But if it's not underpriced and the market has truly corrected, it puts you in a situation where you're not having to wait 30 days to figure out if you're priced right. If you do put your house on the market and you find you're not getting activity in the first week, we used to tell our clients to wait 30 days. Now you got to wait 7 days, right? Literally, like if you are not getting activity and everyone else around you is getting activity, you need to make your price adjustment right now. And then number four is just make sure that your home shows right and make sure it's comfortable for people to come in. So on weekends, some of our clients are going into hotels think about it. Hotels are dirt cheap right now.
Right now, yeah.
And they are super sanitary. Like they literally people are going in there for a weekend, allowing us to have their home. By the time they come out of the hotel, they've got a contract, and then they can go on about the business of either finding their home or transitioning to where they're going.
Understood. Would you consider that a part? Because you mentioned long-term mindset, right? And you mentioned something about smart buyers and sellers. Would you put that into that classification or category?
Yeah, so smart buyers, smart sellers, smart agents, smart lenders, smart title companies. You have to have a team of smart people all around you now. So I would say that your team is more important now than ever, right? So having a lender that not only understands how to get a deal, but how to keep a deal is extremely important, right? So just someone who's intuitive, who's smart, who's kind of troubleshooting things a little bit further out, someone who's been through 08 matters, right? So I would never work with a lender right now that has not been through a tough real estate cycle. I would not work with an agent that has not been through a tough real estate cycle. I would not work with a title company that has not been through a tough real estate cycle, because there's so many things that are unknowns right now. You are going to have some issues. You have to have people that can navigate through tough issues. And the unfortunate thing is, if you have not been through a tough market, then you don't know how to navigate through it.
You don't know how to overcome it. Yeah, no. You don't know how to overcome it. I think we actually have to look in the future a lot too as well. Like when we're doing this business, the biggest thing is also I think with the way that the coronavirus is happening, like it's really unfortunate. A lot of people are being seriously affected by this in a negative way. Business, though, I feel like technology is showing up in a major way. Technology is showing up. And so if you think about how to make things more convenient for your client, those are things that we talked about earlier that we should have been doing and that we definitely should be doing going forward, like those virtual calls. There's nothing to it to pop in and do a quick Zoom call. We're now doing video emails and such where we're getting face-to-face with the clients as well. We have virtual calendars and things of that nature. I'm seeing, and you guys are talking about doing your virtual home showings. I think you have a virtual tour today that you all are doing. And so I think it's very important for us to jump ahead of that curve too as well. So just a couple more things. If you are listening to this right now, thank you for hopping on the call. We are on LinkedIn and we're also on Facebook live here. And so we'll be doing this every Thursday. Today, obviously, is the 5 strategies with my guy, Alan. If you have any questions, I'm on Facebook right now looking at the live stream. If you have questions, make sure you ask, because I have a couple. We're going to have a couple minutes to do Q&A. Alan, I see you have a few of your teammates on here too as well. I might put Sam on the spot. I see Sam is in here, so I might add him to this live stream. Sam, if you can see me, shake your head if you want to hop on with us. Okay, he gave me the thumbs up, Alan. So I'll ask him a couple questions too as well. So hang on one second. There he is.
There you go.
There he is. Sam Maligwe, how are you?
I'm doing well. How are you guys?
Awesome, thank you. Can you tell us real quick who you are?
Yeah, Sam Eligwe, sales manager, buyer's agent on the AJ team with Alan Johnson. So, yeah, he already gave the whole spiel. I'll save him. I'll save him on that.
Hang on, but you add a lot of value, Sam. You deal with many clients, like buyers, folks that are looking to purchase homes. You helped a great deal of buyers last year, and throughout your time in the business. I don't remember if you were in the industry in '08. Were you here then?
I was not. I was in college.
Okay. All right.
I was in college, but I've been in the business now for about 9 years. And thankfully for the team that we're on, we're able to service 150, 200 clients. So there's a lot of, we're all able to learn from each other. The transactions that we have are things that we're always bringing to the table to say, hey, here's what we're learning here. Here's how you guys can implement this with the clients that you're working with. I myself, typically, I would say I'm managing between 40 to 50 transactions a year. So we're all able to share within the team atmosphere, which I think is really important, especially as you guys were mentioning earlier, with the shifts that are happening. If you don't have a team or a leader that's been in that market, it's going to be very hard to navigate as people try to plan the next, 6 to 12 months. So
Understood. So what are some of the strategies that you're doing right now with your buyers? What are you guys talking about? Like, hey, Sam, I want to buy a house and I want to purchase in this certain location and I want to get it done in the next 60 days or so. I need to, break my lease, or I don't want to break my lease and I want to buy. Like, what are you guys talking about right now with your buyers?
I think a lot of it's, like you said, probably just planning more than anything else. I think, trying to move too quick without a plan can end up backfiring. So I think we're trying to take this time to really use services like this where we can meet on Zoom calls and really put together a strategy. I say everyone's plans are different. People buy different times of the year for different reasons. So I have one client in particular that has a lease that's ending in July. We just got on a call this morning and he said, do we have enough time? Sat down, went over the game plan, and we have more than enough time to be able to make that happen. So I think more than anything else, what we're doing internally as a team is really planning first and figuring out what makes sense for the client. Because not everyone's going to be able to buy. We talked about this throughout the week. How some clients, they may be in a industry where it's not a good time. I have one of my clients who's a pilot for Delta, so we're at a point where he may need to wait a month or two, and that's totally fine. We don't want to push our clients to buy if it's not the right time. So I think more than anything else, outside of all the technology and showings, obviously, but we're just making sure that we have a really strong game plan.
Understood. And the advice I would also give, not to bring gloom into it, but because of this coronavirus, like this morning, the jobless claims came out. And unfortunately, there were about $3.2 million at 3.2 million Americans that filed for unemployment.
Yeah.
On the claims that came out for the week of the 21st. Mm-hmm. And so we are seeing a lot of volatility in the markets, with servicers. It's very expensive for them to service loans now. Lenders are pulling out of their warehouse lines. And it's a lot of the reasons why they're doing these types of things is because when they're purchasing these loans, they're projecting for people to make their payments over time, right? Mm-hmm. And so if we're having issues with unemployment and such, it's really difficult for them to pay. But like you said, Sam, as long as you're setting up a plan so that, they can be in a situation to purchase going forward, we know that we're going to get back to work at some point. I think the operative word or phrase is like coronavirus. As soon as this is over with and it's done with, we can get back to some sense of normalcy. Wouldn't you think? Would you agree with that?
100%. And one other thing I'll add to that is we've also said for our clients, how do you answer, if it's a good time to buy? I think two questions that we kind of thought of was like, one, job stability. Is there a chance that you could be losing your job? And a lot of our clients, just fortunate of where we live, a lot of our clients, for the most part, obviously, don't have to worry about jobs, stability in terms of that. And then the other question is that if you're nervous about, buying, maybe you have to adjust what you're paying monthly. So if you were planning on spending $3,000 a month, instead of that, maybe you have to pull back and go at $2,600 a month, and then obviously as you pull back on your monthly payment, then that you have to also adjust your expectations. So again, a lot of it's more strategic than anything else. We're not going out there just randomly throwing offers out there. We want to make sure that our clients do have a plan, not just for now, but also the next 12 months and the year after that and the 2 years. So,
Right. Yeah. Industry needs and home ownership needs to be sustainable.
absolutely.
Yeah. Yeah. So we have, I don't know, about 4 or 5 more minutes. I'm not getting very many questions in here. We're getting some likes and a few little comments, people telling us that they love us and stuff. But if you have any questions, please put questions in the comments here. Alan, do you have any like parting words or?
Yeah. So I got a quick question for Sam. So and for you, Shawn. So we talked about like this market is not for everyone, right? But this market is for someone, right? There's always an opportunity in every real estate market, and we know. I think Sam and I and our team, we do a really good job of like making sure that we identify the people who need to stay put, right? Who need to stay put. You don't need to move. You don't need to refinance, Shawn. And we also have a duty to tell people that it is a great opportunity for you right now, and even through your fear, right, or even through your uncertainty, is an opportunity that you may not have in 12 months or you haven't had for a long time.
Mm-hmm.
I would love to hear from both of you. First, from Shawn's side, who should be actively out there looking to go get a mortgage or get a refinance? Is there a price point? Is there a prototypical type of homeowner? And then Sam, the same question for you. Who is the prototypical person that this market is ripe for?
Got it. So, Sam, it depends. No, I'm just kidding. But it's one of those questions. Thanks a lot, Alan. That wasn't quite a softball, but
no softballs here, baby.
yeah. But for refinances, I think that's a little easier. I think most people that I'm seeing right now refinancing, they're saving somewhere between 0.5% to a full 1% in interest rate. Folks are saving hundreds of dollars a month on that. So it's really about doing a complete analysis. It's not always wise, though, for them to refinance if they're far into the term. So someone may already be 10 years into their mortgage, and to go down 0.5% doesn't really make sense because they have to start all over again. And you talked about the cost of your money. So I'm finding, though, anyone right now that has done a real estate transaction after 2016, so between the end of 2016 and now, it's a great opportunity for them to refinance because Brexit happened with, the European economy in Europe and Britain, and that drove our interest rates down pretty low in 2016, historical lows. So anyone that bought at the end of 2016 or did a refinance transaction got a really good rate and a good term. After that, though, it was more of a sort of a soft, normal market. So right now is a really good time for anybody in that standpoint. Like in regards to a buyer, I can only speak just a quick story. I have a buyer, single parent, 2 kids, and her mother lives with her, relocated from Texas. Divorce situation, right? But she was paying $2,500 a month, right, to rent. She was able to find a bank-owned property, which I think we're going to start to see some of those come up in the coming years. She was able to find a bank-owned property. She was then able to finance her renovation. We did a 203K loan for her, right? And so now she's getting a great house that I went under contract for $300,000 in Charles County, Maryland, right? She's going to put in $25,000 worth of work on it. That property just appraised for $377,000, right? So she's getting almost a $400,000 house, right? For less than what she was paying in rent in a smaller place, and her kids don't have to sleep in the same bedroom now.
Wow.
And so I think in that that particular circumstance, in that situation, I think it's very important for you to look at what you currently spend versus what you will spend. And if you can get somewhere close to that, or even if it's a little bit more, we always adjust to making those payments. You get some help on your taxes. I'm not a tax advisor, but you get some help in the long run. But to answer your question, is based on that particular story. I'm seeing more and more clients like that that are winning with families that are, moving out of a situation where they were renting and they're getting into a much larger house and paying about the same or a little bit more than what they were paying before.
Right. What about you, Sam?
I think that's Shawn. And I'll just piggyback off of that. Definitely, one thing I tell my clients too is that rents are not getting cheaper. Like they're not walking in saying, "Hey, you're paying $2,500 a month. We'll go ahead and lower to $1,800." Like the rents are not getting lower. And so to kind of answer your question, Alan, I think the market right now, the way it's sort of, I said, adjusting towards is definitely if you're a move up buyer. So you own the property for a few years, you got some equity in it. It's a great opportunity to sell in a market where the inventory is low. You talked about it earlier, how we don't have the same number of inventory. It's a really good time to buy. But in terms of the great properties, like the ones that are priced right, did all the right renovation, it's a good time to be able to sell that, get top dollar, and at the same time capitalize on lower interest rates. And that's also a reason I would recommend for first-time home buyers right now. Like, we're spoiled. I'm 34, so a lot of the 30-year-olds, millennials, they see a 4.5% rate and they think that's high. I mean, you gentlemen can speak to it about, where rates were, 12 years ago, 15 years ago. And so I think we just been inundated with so much information that we think that 4.5% is high. And I think as you start to learn what's happening in the market, it's actually historically low. It's still extremely low. So I think it's a great opportunity to still lock in something low long-term. And the one thing I'll also add, Ali, is probably I would ping pong this question back to you. Do you think it's a good time? I think for people that are downsizing too, like those that may be thinking about, early retirement, maybe they want to, they have a property, they're going to be moving out of the area. Do you think it's a good time for that, in your mind?
Yeah. What I see is generally what happened in 2008 is the higher end properties got hit first, right? And then the properties that were harder to finance that were lower got hit second. So those
higher end, can you give like a number to that?
Yeah, so it depends on where you're at, right? So in Prince William County, a higher end property may be $750,000, $800,000, $900,000 or more. Fairfax, that number can change. DC, that number can change. It just like where is the top 10%? The top 10% of pricing in your location. Now, if you are looking to stay in this property for the next 10 years, it doesn't matter if you're buying that property. Because we are going to get to my wife and I are realizing that the house we're in right now is too small. So we're going to be buying something bigger, right? And we're looking at this being a 15-year house. But for someone who's looking to sell a house that's on that higher end, I think you got to really think about what you're doing and make sure you do it right. Because those consumers, there's not as much of an appetite for those properties, especially if there's a lot of other properties out there that are similar to yours. You've been riding, if you're a seller, you have been riding high on the hog for 8 years, for 7 years, right? You have been appreciating at levels that are historic, right? No one's gonna feel sorry for you if your price comes down by 10%. You got 30% over the past 7 years. And I think we got to have some real conversations with sellers and some real conversations and letting them know, like, you got a lot. You got a whole lot. Like, let's not pause your plans because you're not getting the extra 20 grand or you're not getting the extra 50 grand. Now, I understand if that changes your life, but if you got a lot of appreciation, I would be pricing right and I'll be moving on. If this thing hasn't taught us anything, life is not promised, right?
No.
You got to make moves for your family, right? You can't always make economic moves, right? You got to make moves for, like, right now. There's no price that I would pay for the comfort of my kids running around a house or running around a yard, right? If I can afford it, and the bank's gonna give it to me, and generally me and my wife are on the same page, like, I'm not thinking about that right now. I'm thinking about the comfort of my home. I'm thinking about the comfort of my family. I'm thinking about the ability to be able to have my mom and dad come. I'm thinking about the ability to be able to move the way we want to move. So I think in parting, there's one thing to look at the economy, and it's another thing to look at your economy, right? And those two things almost have to be separate, right? Because what you see on the news may not be your reality, right? And I pray that it's not your reality. And you need to be making decisions in your reality, not in the reality of everyone else. You never made any moves in other people's realities anyway. Why would you choose this moment and this time in life to start like making decisions in other people's vacuums?
Yeah, not just because the media is telling you that you should. Yeah,
exactly. It just doesn't make a whole lot of sense to me.
Right. Sam, I definitely agree with you too as well. And we'll go after this, but I agree with you on the move up buyer. Seeing a great deal of move up buyers. Maybe it's because of my age. I'm not sure. But I'm really seeing a lot of that. Two things. We always talk to our borrowers about this. Number one, think of a payment that is comfortable payment. You can make it, no issues with it, sleep at night, real good. Secondly, think of a payment that's a stretch payment, right? What is that payment that you're not willing to go a penny more? Because inevitably, Sam, Allen, you know this, you get a buyer out, they start to look at their comfort payment, and then they see some amenity in the house or a particular location, and they just got to have where that stretch payment takes them. But I think you should understand those two things, because that helps us to be able to fit you into a price range. And like Allen mentioned, that's what's the most important thing, because the three of us, we never have to make anyone else's mortgage payment.
Right.
Not ever. Right. And so the most important thing is that they understand that they're getting themselves into something that they can handle. And this goes back to Sam and Allen, what you guys talked about having that plan. And I think that's the most important thing. So I know you all have your virtual what is it, open house? Is that what it is?
Yep.
Open house. And real quick, we have a good bit of people on here. Can you tell us where to find that open house today and what time?
Sure. I think it's actually going to be. Are we doing the one in Huddersfield, Allen?
Huddersfield's under contract, actually. We're doing townhouse off Old Bridge Road, Hunter Brook. Hunter Brook, perfect move up. So let's talk about that. Three levels, nicely renovated, at right around like Tackett's Mill, like North Woodbridge. I think that's one of the intersections that's cool because you can get out in multiple ways. So Shawn, someone's purchasing a $320,000 property. They're putting down, let's say, 5%. Like, around what type of payment is that person? What type of rate and what type of payment is that person looking at?
You're gonna be in the threes, like the mid threes or so, roundabout. 5% down. You'll have some mortgage insurance.
3% rate?
No, not 3%. Mid threes. There's a difference.
Millennials, man, you hear 3, they hear 2.9.
Yeah, it'll be in the threes. It depends if it's an FHA mortgage, you're gonna probably see like low threes and such. It depends on their credit. Rates are, they've ticked up. The payment on something like that, under $2,000, like $1,800 a month, something like that.
Right. So that property that property will rent for about $1,900 a month, and you can buy it for about the same price. So what we're finding is that those are the opportunities that we're finding for people out there. I would encourage you guys, if you're really interested in learning real estate and learning. I wrote this book from a lot of experiences in 2008. A lot of things when the market crashed, I was, cataloging. I was, making sure that there were lessons that we could learn later on in life. And if you're thinking about investing, you're thinking about buying, you're thinking about selling, a lot of people have found value in this book. So reach out to us. We can give you the link. You know what? The first 5 people who hop on, who share this broadcast, I will send you a free copy of this book. So the first 5 people who share a copy of this broadcast, I will send you out a copy of this book. Just because, and honestly, there are a lot of agents that need to read this book too. There are a lot of agents who haven't been through 2008 who can learn a lot of lessons that will save their clients a lot of heartache. So, all the proceeds go to our Be a Blessing Foundation that's stepping up in a major way in a lot of our clients' lives. And I didn't write this book for profit. I wrote this book for purpose, and I wrote this book for people to understand that this is bigger than real estate, and to teach and to lead. So, check it out. I think you guys will enjoy it.
Great. Well, Alan, sir, man, thank you a lot. This was very helpful. Like you said, the first 5 people that can share this, because I think there's some valuable information on here between the two of us, almost 40 years of real estate, banking, finance experience. And so it's like we said, it's an unprecedented time. You guys take care of yourself, be safe, still stay in the house. A lot of us can do the work from home. And then, as I said last time, just help somebody. Just try to find someone that you can help as much as you can, because we need it right now. And, anyone that's on here that need me for anything, if you have any questions, just reach out. If I can't help you directly, I'll promise you that I'll be able to connect you with someone in our network. So, Alan, thanks again. And we'll be talking soon.
All right, brother. Peace.
All right.